You've heard the headlines. The great Rolex sell-off of 2025 has begun. The bubble has popped, prices are in freefall, and the party is over. But is that the real story? The truth is, the market is not experiencing a sell-off in the traditional sense. It's undergoing a deep, multifaceted recalibration. By the end of this video, you will understand what is actually happening to Rolex prices, the strategic moves Rolex is making behind the scenes, and how you should navigate this new market, whether you are a buyer, seller, or collector. If you value data-driven analysis on the world of luxury, go ahead and hit like, subscribe, and turn on all notifications. The narrative of a market crash fundamentally misunderstands what's happening. Let's be precise. A crash is indiscriminate panic selling that pushes prices below their historical value. A correction, on the other hand, is a significant drop from recent peaks that purges speculative froth from the market. What we've seen from 2023 through 2025 is a predictable market correction, and the data proves it. The watch chart's Rolex Market Index, which tracks the 30 most popular models, shows a modest overall decline of just 2.1% over the past year. That is not a crash. More importantly, the most iconic Rolex models continue to trade at substantial premiums above their 2025 retail prices. A true sell-off would see these premiums evaporate entirely. Let's look at the three flagship steel sports models. First, the Rolex Daytona. This was the champion of the speculative boom, peaking at around $50,000 in 2022. It saw a dramatic correction, but has since stabilized at a new equilibrium of around $37,000. While that's a 26% drop from the peak, it still commands an astonishing 131% premium over its $16,000 retail price. Next, the Submariner date. It followed a similar, less extreme path. It rose from a baseline of $9,200 in 2020 to a peak of about $18,500. It has since corrected and stabilized at around $13,500. That's a 27% drop from its high, but it still maintains a healthy 38% premium over its retail price of $9,800. Finally, the GMT Master 2 Pepsi. This watch peaked at $35,000 in 2022. It has since stabilized at a strong $23,000. This represents a formidable 107% premium over its $11,100 retail price. The pain of this correction is very real for those who bought at the speculative zenith of 2022. But the takeaway is clear. The market hierarchy remains intact, and fundamental demand still massively outstrips supply at the retail level. The market has simply unwound the entire speculative bubble of the pandemic era and reset to a pre-mania baseline. But this isn't just happening to Rolex. Rolex is an active and powerful agent, using this market calm to consolidate its power. It is making three critical moves. First is the global rollout of its certified pre-owned program. This is a checkmate move. By officially entering the secondary market, Rolex is now selling authenticated, factory-serviced used watches through its authorized dealers. These watches are priced at a significant premium, often 25 to 35% higher than their counterparts on the grey market. This establishes a new, officially sanctioned price floor, preventing the market from ever entering a freefall. Second is the mastery of scarcity through strategic discontinuations. In 2025, Rolex retired unique models like the colourful Oyster Perpetual Celebration dial. This instantly transformed a standard production item into a scarce collector's piece, causing its secondary market value to surge by 210 to 290%, even as the broader market was cooling. Third is the power of perpetual price increases. Every year, Rolex raises its retail prices by 3 to 8%. This acts as a powerful ratchet mechanism, systematically lifting the entire secondary market price structure and rewarding long-term holders. These are not the actions of a brand in crisis. They are the calculated moves of a market leader building a more resilient ecosystem. This new market has also created a new type of consumer. The era of the flipper who bought any steel model for a quick profit is over. The current environment favors a more educated buyer who values craftsmanship and history. Enthusiasts are now treating their collections like a living portfolio, strategically trading up and consolidating several mid-tier pieces to fund the acquisition of a single grail watch. This has also led to a surge in demand for vintage and neo-vintage models from the 1980s and 90s, as collectors seek out character and relative value. For the most hyped models, the barrier to entry at an authorized dealer is now higher than ever. Dealers are reserving pieces like the steel Daytona exclusively for their higher-spending VIP clients with six-figure purchase histories. This pushes nearly everyone else permanently into the secondary market. As a quick reminder, this analysis is for informational purposes and is not financial advice. So let's recap. First, the great Rolex sell-off is not a sell-off. It's a necessary correction that has flushed out speculators and established a new, more stable price floor. The market has reset, but key models are still trading far above retail. Second, Rolex is in the driver's seat. Through its certified pre-owned program, strategic discontinuations, and annual price hikes, it has more control over its brand value than ever before. Third, the consumer has matured. The market now rewards patience, knowledge, and a long-term perspective over short-term flipping. With the market reset, the choice is clearer than ever. If you were buying one Rolex to hold for the next 10 years, would you pick the iconic Submariner at its new, lower price point, or a neo-vintage model with more character and potential upside? Let me know your pick in the comments.